Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping back down into the world of BTC, taking a look at what's been going on most recently with the price action and what we would expect to happen next. As I get into the video, if you find it useful and informative, smash that like button. We do appreciate that here at Cheeky Crypto, and if you haven't yet joined us in Discord, why not check it out, linked in the description down below. I don't think you'll regret it. Let's waste no more time though. Let's jump right down into this one. Bitcoin paired up with USDT on the hourly chart and Binance is the data source. Following on from yesterday's video, we were obviously talking about this move upwards, which will be our wave 4 situation. We do kind of target this out between the 22,084 and 22,464. I still think we're on this journey to the upside here, and we're just experiencing a little bit of volatility at the moment. Taking a look at the structures, it looks like we have some odd kind of three-wave structure where we're probably still looking for a C wave to come on up here. So expect a bit of volatility here latter part of today, Sunday, and probably then looking for moves to the downside next week. Let's just check the stochastics in terms of the RSI. So stochastic RSI here on the hourly is showing us with downward momentum. It could be that we're in the B wave movement before we have the C wave. We are high, just coming up into the overbought area on the 4 hour. 8 hour still shows progression upwards, 12, 16, 20, and daily charts all look primed for a move upwards, but I think that will have to come later once we finish our low expectations. Now, it is possible that our typical 38.2% retracement for wave 4 just falls short of our target, and so we'll always want to be a little bit mindful over that. Let's go ahead and just get our measurements in here. We're going to take it from the top to the bottom here, and yeah, so basically it's 22,044. We've come up to the high of 21,960, so we are a little bit short on it. I'm not overly too concerned about that though. The main thing is making sure that we have a good corrective structure, which appears what's happening right now. I still think that we have that ability to move up just a fraction more and come up into these higher ranges. So we'll see how that kind of plays out. It could just be that we break down quickly, grab in the fifth wave lows, and then we come up into this fair value gap. This imbalance that was seen from a smart money concepts point of view. This is the 22,084 to 22,464. Okay, so essentially it does look like we're going to be coming up regardless, but we do have to finish this structure down here in my opinion. Of course, this is a C wave low point. So once we kind of complete that C wave, we can then talk about a move upwards. I still think that we are likely to see a scenario unfold where we have this as a giant A wave. We come up into these kind of mid ranges where we found consolidation previously, so heavy resistance, and then we come down deeper, because I do think we have to be thinking about the moves into the lower ranges, more specifically around the $18,600 level. So as we come up into our weekly chart, again, we can see that we are still under this rejection. We're finding support at the moment on our previous area of supply. So this is looking like basically a supply zone has now become a demand zone. This is 20,892 to 21,442. Wicking into this area would basically confirm it. So finishing off our fifth wave lows on our hourly chart, then migrating out of here. You can see that the 200 EMA is still our resistance point. We're not looking at breaking up above that necessarily. So we'll see seeing what happens next week, but I don't think we're likely to see that. And of course, we have our higher resistances in our supply zone at 24,300 to 25,230 approximately. So we can see that right in there on our weekly chart, and lots of resistance up in this range. On our weekly chart, we are overbought on the stochastic, so we should be aware that there is a lot of downward momentum here that we are looking to kind of see over the next few weeks or so. From our Wyckoff accumulation patterns, yes, we are still looking at our phase B. We're just peaking up here above our automatic rally, but not up onto the higher resistances. That's this one right here, guys. You can see that's exactly where we are, higher than the automatic rally, but not going any higher than the resistance line at the top at 25,200. You can see that we came up a bit and we've come down now just below the automatic rally. The expectation is to come down towards the secondary test of phase A, which puts us on the $18,626 level. There are two patterns on the Wyckoff accumulation. Okay, we have two different schematics. Both are the same during phase A and the beginning, probably the first 2/3 of the phase B, and it changes towards the ends of phase B, because not one of these has a spring event. If I can get my words out, one of these has a spring event and the other one does not. So the secondary test of phase A, the 18,626, is to see whether or not you hold that as a support line. If you hold that as a support line, then we're following schematic number 2. And if we lose that as a support line, we're more than likely following schematic number 1. Of course, in validation, or to make all of this void, we have to go up higher than $25,211. So we're still on the fence as to whether this plays out. And again, I'm not really that precious over the Wyckoff accumulation patterns, but it's an interesting one that's currently kind of mapping out. From our weekly chart, again, we can obviously, remove, let me just get rid of this. What's going on here? Yeah, let's get rid of that. So as we come down into our weekly chart again, we can remove our stochastic RSI and take a look at the volume profiles. The volume profiles, of course, are decreasing as price went up. Again, that's not a positive sign. We remove the volume profiles for the RSI, and the RSI is actually okay. It's not too bad. It doesn't give us a kind of a bearish kind of view, which is nice to see. And the divergence is nothing major going on there. But the stochastic is the main one that we're seeing high points on. Now, one of the things that we should be aware of here is that we do have a divergence on our stochastic RSI. And this is basically that we have gone up into higher highs on the stochastic RSI, whilst at the same time going down into lower highs on price. This shows us that the momentum isn't really supporting a move upwards. It shows us that we're actually losing our momentum, losing our strength of our move to the upside, whilst unable to actually, go up into a higher high. This basically tells us that we should be thinking bearishly, not bullishly, according to the stochastic RSI and the price action of the candles. So we want to be aware that things are not overly brilliant there on that time frame. Now, if we come over into our daily time frame, we can of course see that on our 200 EMA and our 50 EMA, we might be looking at a cross on the daily at some point soon. We'll see if that plays out. That might be deemed positively. Now, we can see that the 200 EMA could be acting as support level on our fifth wave low point, right? So we're talking about that fifth wave coming down. It could be that this 200 EMA is the support level that we're actually looking for on that journey. So from our how do I articulate it? From our Elliott wave theory fifth wave low point, right, that we're looking at this point, and then we're looking to find it as support and move up a fraction. We have got, of course, an oversold stochastic RSI here, so we do know that there is upward momentum available to us. The question is there going to be that much buying pressure that really gives us sustainable growth, or whether or not we are just going to be looking at some kind of relief rally before falling down again? That's all yet to be decided. Now, from our volume profiles, again, we can see that there isn't actually a lot of good positive volume growth going on here. Again, we can see that volumes are decreasing even though price is pushing up. Again, we know that there's a little bit of FOMO activity in terms of the price action pushing up higher. But one of the things that we do know is that it's really just driven from the DXY and Forex traders dumping dollars in favor of other currencies. Now, if I throw on the VPVR, this actually shows us that we are in a range area at the moment where there's very little kind of volume being transacted. And most of the volume happens to be down here in these lower ranges around 19,000. If we come down even lower, we can see right in down here, it's about actually 19.2 to around 19.7. Right, so we know that this is an area of focus that we want to be thinking about. And you can see up higher, there isn't really a lot of volume being spoken about. So there's a little bit in here on the slightly higher range around 23s, not a lot in the range that we're currently at. And obviously the bulk of it is all the way down here in this low mid ranges. So historically speaking, this is where people have been transacting. And so price likes to kind of gravitate towards it. So when it comes to our daily, we are a little bit concerned over the volume profiles. The RSI is okay. And it has obviously flashed up with our bearish divergence, which we were talking about a few days ago or weeks ago. Essentially, we're going up into higher highs whilst we're losing that momentum. So, you can't really kind of get that from the RSI point of view. So we saw bearish divergence here, and basically momentum starting to shift to the downside whilst we were going up higher in price. That just tells us that people are getting ready to kind of reverse. Slightly different to the kind of divergence that we were talking about with the stochastic RSI, where we start to see that the strength of the movement's kind of running out through a stochastic RSI moving slightly higher. But nonetheless here, the divergence has played out. We've moved down quite a bit, so now we're just looking for a bit of a relief rally, I think, in the coming kind of days. It'll be interesting to kind of see how that does play out overall. So in terms of Bitcoin, I think we're going to be in for a volatile week next week. We'll have to see how it kind of plays out. Essentially, we still have our higher expectations. We could revisit into our kind of supply and selling area around the $23,000 to $24,000, pushing up slightly into that 25 possibly. But I think that kind of shot and that opportunity is kind of slipped away quite a bit at this point. So yeah, we'll kind of be really cautious about it where possible. But ultimately, I do think that we're going to see a bit of a move to the downside, finish off our hourly fifth wave movement, and then relief bounce our way up. And we'll obviously have to assess whether or not there's going to be decent momentum, good volume coming in for that move, or whether or not it's going to kind of run out of steam around the kind of 22k range, and maybe start to actually see another decrease in the Bitcoin price. Let me know what your thoughts are in the comments down below. Really interested to kind of get your views and opinions on where you think Bitcoin is going next week. We'll be live on YouTube in the morning, so do check that out. And other than that, guys, have a fantastic weekend, and we'll catch you all in the next one.